Welcome to the podcast covering the benefits and limitations of activity-based costing and activity-based management systems. Activity-based management, or ABM, refers to using activity-based cost information to make decisions that increase profits while satisfying customers' needs. Activity-based management means using activity-based costing information for pricing and product mix decisions, for helping to identify ways of cutting costs, and for routine planning and control decisions. Activity-based costing can be used to make better decisions, including pricing of product and product mix decisions. Product mix refers to how much of each product to produce. ABC recognizes that not all indirect costs are driven by the number of units produced. That is to say, not all costs are unit-level costs. Rather, many costs are incurred at the batch level or product level, where they can be spread over the number of units in the batch or in the product line. ABC tends to increase the unit cost of low-volume products and decrease the unit cost of high-volume products. As a result of using ABC, many companies have found that they were actually losing money on some products while earning much more profit than they had realized on other products. By shifting the mix of products offered away from less profitable towards the more profitable, companies are able to generate higher operating income. Companies adopt activity-based costing to get more accurate product costs for pricing and product mix decisions, but they often reap even greater benefits by using activity-based management to pinpoint opportunities to cut costs. As the term suggests, value-added activities are activities for which the customer is willing to pay because these activities add value to the final product or service. In other words, these activities help satisfy the customer's expectations of the product or service. By identifying the company's activities and their related costs, managers can analyze whether all of the activities are really necessary. On the other hand, non-value added activities, also referred to as waste activities, are activities that neither enhance the customer's image of the product or the service, nor provide a competitive advantage. These types of activities, such as storage of inventory and movement of parts from one area of the factory to another, could be reduced or removed from the process with no ill effect on the end product or service. The goal of value engineering is to eliminate all waste in the system by making processes effective and efficient. In addition to pricing, product mix, and cost-cutting decisions, a company can use activity-based costing in routine planning and control. Activity-based budgeting can also use the costs of activities to create budgets. Managers can compare actual activity costs to budgeted activity costs to determine how well they are achieving their goals. Merchandising and service companies also find activity-based costing techniques useful. These firms use activity-based costing to allocate the cost of operating activities rather than production activities among product lines or service lines to figure out which are most profitable. ABC can be used to allocate the cost of store operating activities such as ordering, stocking, and customer service among its various departments. An accounting firm may use ABC to allocate secretarial support, software costs, and travel costs between its tax, audit, and consulting clients. Manufacturers may use ABC to allocate operating activities such as research and development, marketing, and distribution costs to different product lines. Managers can use the data generated by activity-based costing to determine which products or services to emphasize, to set prices, to cut costs, and to make other routine planning and control decisions. Developing an activity-based costing system takes a significant amount of time and can be quite expensive. So, do the benefits of adopting activity-based costing or activity-based management exceed the costs? The benefits of adopting ABC/ABM are higher for companies in competitive markets because accurate product cost information is essential for setting competitive sales prices that still allow the company to earn a profit. And ABM can pinpoint opportunities for cost savings which increase the company's profits or are passed to the customers in lower prices. The benefits of adopting ABC ABM are higher when the risk of cost distortion is high. For example, when the company produces many different products that use different types and amounts of resources, the company has high indirect costs. The company produces high volumes of some products and low volumes of other products. On the other hand, if all products use similar types and amounts of resources, a simple plant-wide allocation rate works just fine. And if the company has relatively few indirect costs, it matters less how they are allocated. The costs of adopting ABC are generally lower when the company has accounting and information systems expertise to develop the system and information technology such as barcoding, optical scanning, web-based data collection, or data warehouse systems to record and compile cost driver data. A survey showed that in the majority of companies surveyed, the value of ABC exceeded the costs of implementing ABC. In other words, it was worth it. ABC is not, however, a cure-all. As the controller for one Midwest manufacturer said, ABC will not reduce cost. It will only help you understand costs better to know what to correct. Broken or outdated costing systems continue to report product costs, which are then used to make other decisions. How can you tell if a cost system is broken or needs repair or should be updated? Cost systems may need to be repaired when 1. Managers don't understand costs and profits. 2. Bids are lost when they were expected to be won. 3. Bids are won when they were expected to be lost. And 4. Competitors price similar products much higher or much lower. In addition, the cost system may be outdated if there is a more diversified product line, or the company has re-engineered its process, but not the accounting system. And that wraps up the podcast covering the benefits and limitations of ABC and ABM systems.